slightly higher than the CNBC TV18 poll of 4.1%. May WPI inflation 4.43%. I think that's the only number that we have right now. Ekta, you want to come in?
Yes, I think this is actually quite a bad number if you compare it to the previous month, because the previous month we had the WPI data which came in at 3.18%. So it's a huge amount of hardening which has actually taken place in terms of the WPI data. So 4.4% is where it's come in at. What I would wait for is basically the core inflation data, because that is expected to harden for WPI as well. Remember, last month core inflation came in at around 3.19% versus 3.16%. So this month there are expectations that it could come above 4% as well. So based on what we are seeing, remember that there were commodity prices which really hardened on a month-on-month basis, impacting WPI, which is probably going to reflect in terms of the core inflation data as well. Tushar Arora of HDFC Bank joins in to discuss the data. Tushar, your first thoughts on the headline number which has come in at 4.4%?
I think it is higher than expected. Market shouldn't take it in a positive fashion, and I think CPI, it came in almost in line with expectations, but wholesale prices, we were at 4.1, 4.2. I think markets were also close to that level in terms of expectations. So this number is certainly above expectations, and it should not bode well for the bond markets, and I think it should boost the expectations for one more rate hike.
Okay, well, we are still waiting for the internals in terms of what the WPI could be. Yeah, we have the food inflation data, in fact, which has now come up towards 1.1%. I think 1.12% is where food inflation has come, and compare this to around just 0.6% in the previous month. So that was expected in terms of a hardening on a month-on-month basis. But Tushar, now food inflation, say from March, where it was just about in negative terrain, has jumped all the way to around 1%. So what's your sense in terms of, say, the trajectory for food inflation?
See, seasonally we are entering into a phase when food prices would start going up on a sequential basis. I think the added factor would be how the MSP policy of the government pans out, the impact of which we would start seeing maybe August, September onwards, when mandi prices starts adjusting to the new MSP policy. So seasonally the trajectory would be upwards for food in general. The upside pressure could come in because of the MSP, and that is the risk which we have to see and watch out.
Okay, primary articles inflation has come in at around 3.16%. Tushar, if you had to give an assessment in terms of what core could have been for WPI this month, what is your ballpark figure?
I think the number you mentioned, we could see a higher number by 20 to 30 basis points compared to the last month's reading. But more than core, I think the fuel category is also important. I think all three categories are going to show an uptick this month. Manufacturing could be still subdued, but the other two items, primary and fuel, could be contributing mostly for the uptick in headline number this month. So fuel, maybe if you can look into that number.
Okay, we're still waiting for the fuel inflation to come through, but the manufacturing product inflation has actually spiked up all the way to around 3.7% versus 3.1%. So there is a hardening which has taken place there as well. Overall, Tushar, what would you expect now? Because post the CPI data, does this sort of firm the stance that the RBI could act as soon as August in terms of another rate hike?
So RBI's estimated peak is 4.9% for the first half. I think with CPI we almost touched that peak with the recent number for May. June we could easily cross 5%. Our expectation is around 5.5% for the headline number. June is also unfavorable in terms of base for WPI as well. So both WPI and CPI should be going up from the current levels in June. For the CPI specifically, it could even breach the RBI's estimated range of 4.9%. So certainly I think rate hike is almost on the cards. Whether it is August or October, I think it would depend on how much clarity the RBI gets on the MSP policy. Because oil, they have factored in that the oil prices are going up. They have factored in the risk of core inflation. They changed the inflation estimate and increased it to 4.8%. Our estimate is for inflation is for 5%. So we have 20 basis points higher number for headline inflation, which I think RBI still needs to look into. And I think if they get clarity on the MSP policy, which is the major risk right now, I think they could go as early as August, but if they don't, then I think they would wait till I think October. But one rate hike is certainly on the cards this year.
Okay, well, that fuel and power inflation, in fact, has risen over 2% on a month-on-month basis. So, Tushar, that's the information that you wanted. If you can just give your comments with regards to that particular statistic, as well as what is the trajectory you might expect from the RBI here on.
So I think fuel this month onwards, including both on CPI and WPI, should have an upside pressure because of fuel and oil prices going up in general. The entire transportation cost could come under pressure going ahead and lead to higher inflation expectations in general. So this is a broader risk coming in from increase in oil prices, which is happening since the beginning of this year and has taken a rapid path in past 2 months or so. So fuel is a risk which we need to be cognizant about, and we have to be taking that into account into our inflationary expectations and equations going ahead. RBI is more or less doing that. What they are not doing at this stage is maybe food. The risk related to food is something which is out of their equation. Let's see how that pans out in the months to come.
Okay, all right, Tushar, we're going to leave it on that note. Thanks very much for joining in. So there is a hardening which has come in for the WPI May figure, much more than at least what the street had anticipated, to levels of around 4.4%, and the other statistics such as fuel and power as well as food price inflation, all of them and manufacturing have all seen an uptick. Back to you guys.
All right.